Well, today on the Money Matrix, we learned about opportunity with Woody Woodward. And when we talk about opportunity, here are two guys, Michael Huggins and his special guest, Eric Counts. These guys know how to spot an opportunity and apply it to the world around them and make it a better place. And we've got the opportunity this morning to listen to these guys. Good morning, gentlemen. How are you?
Doing
Good morning,
fantastic. Good morning.
All right. Well, welcome everyone. Good morning. We got some special treats for you. We are talking about how to properly use our funding systems to speed up your sales systems. So let me give you permission to share, Eric. And guys, I don't know if you guys know this. Before I met Eric and the systems that he brought to Renatus and to Bob Snyder and to the systems that we're working on, it was pretty difficult to find our students funding. I mean, they pretty much had to have the money right there, or they had to go and just do our UGA program. And so what he brought to the table and how it's impacted my business in such a huge way. I don't even know how to calculate the value that Eric has brought to my business. And so I want to make sure you guys get to hear from him how the system that he's put together works, why you need to do it this way so everything runs smoothly, and all the special magic that comes with that. I don't know if you guys know this, but there's an art to it and a science, and he's got both sides of this down. All right, Eric, I'm gonna make you the host so you can share your screen.
I'm just curious where we took this picture and how I didn't know that I got super photobomb. That's nice. That's photobomb level ninja right there.
Dude, I'm telling you, I learned from the best. Okay, you are now the host, so you should be able to click on the share screen button at the bottom.
I got you.
Sweet. So yeah, guys, because I understood Eric's funding program and then got to see how his home staff works and how I can integrate my customers into what he's doing, it's sped the process up. When I wasn't explaining it correctly at the beginning, and then my customer would go through his process, it wasn't as smooth as it could have been. So I asked Eric to be on the line with us so that we could use this process quickly, easily, and we can all make more money. That's one thing you can count on us, is we're making more money. So I'll turn it over to Eric. Thank you.
Awesome, man. Well, I appreciate the chance to talk to the team and to clear up any confusion and on how the program works and why the program works. And so I am gonna go through this. Normally, this webinar is closer to an hour, but I'm gonna be sure and get it down into your time schedule for you guys, so not keep you too long. So getfundedonline.com. It's not magic money. It's smart money. The reason we say that is so many people think that it's some sort of, like there's this magic wand of money, and it's just not what it's about. At the end of this webinar, I think you guys will see that it's just about being smart with the process. So over this webinar, I'm going to talk really quickly who are the credit nerds, the funding process, available funding that's out there, and the fund system, and why that can speed up and really maximize your process quite easily. Who we are is, oh, no, that's Iron Man, a genius, billionaire, playboy, philanthropist. No, we are your consigliere, and that's a joke between myself and Nancy Rowe that goes back pretty far, but the consigliere is like the mob boss's number 3, right? It's there's the boss and the underboss, and then you've got the consigliere, and that's where you go to get all of your best information. So it's your consultant, your guide, your Sherpa. We are your matchmaker. We are your voice. It's amazing how many times a single phone call can turn a declined application into an approved application, or an approved application into a higher approved application. Sometimes we can make those calls on your behalf. Sometimes you need to make the call. But if you need to make the call, the great thing about our offices, they're going to be fully prepped and aware of what you need to say, who you need to call, the number you need to call, all of those things. And the great part is all we're ever going to ask you to do is tell the truth. So it's a really simple process. Just, hey, call this number. They're going to ask you some questions. We need you to say this and then tell the truth. And that's it. Also, really quickly, who we aren't. Credit Nerds does not issue, approve, grant, or service any loan of any kind. We are not the lender. We're matchmaking, right? It's just important to know. We're not miracle workers. We are getting closer, but not everyone gets large level unsecured funding. Now, the great thing about Renatus, as we all know, is that every single person that comes through these processes has the option to fund their education. One of the things that we've noticed that's really taken off is not setting people up for failure. So don't set them up with the concept of, hey, go here, see if you can get funding, but if your credit sucks and if you suck and if you're a bad person, don't worry, we've got this other thing, this billing program. So instead, you just say, hey, check this out, see what happens, maybe they can get it done. What will happen is, even if that person is at a level where they can't get traditional funding, they're going to be presented from our office a positive. They're going to hear, congratulations, we can get you set up for this program. And no matter what their profile is, no matter where they are in their finances, they're going to hear a positive move forward. And a lot of them, guys, when they're not expecting to hear yes, and then they do hear yes, it's like, what? Wow, yes, awesome, I'm excited. And they move forward. Right now, we do that with UGA. So some of the talk that surrounds UGA has actually been pulled back and said, hey, just get an assessment, see what happens. And when they hear, hey, congratulations, you've been approved for the UGA funding program. Or in the future, when they hear, congratulations, you've been approved for the Renatus billing program, they hear that they've been approved and there's a positive feeling instead of a negative feeling moving forward. Other thing is, we're not psychic. In order to do a proper assessment, we must be able to view a credit report. Otherwise, we're just guessing, and guessing gets people, to make bad decisions. Really quickly, a little bit about what our offices do. We're currently funding about $1 million in approvals every month out to the Renatus community. We've helped more than 3,500 people get access to funding to purchase their education or real estate deals. Since the program started about 3 years ago, we've done over $35 million in approvals, currently working with 124 different lenders, and the average processing time is 1 to 3 days. Now, that's our processing time, not the time that it takes to receive funds. There's no speeding up the time that it takes to receive funds, but there is speeding up the processing time. And the way that's done is by staying on your people and saying, hey, did you, I noticed a note in funds that says you need to turn in this certain document, or I noticed a note in funds that says they're trying to reach you to do your welcome call or your funding call, whatever that may be. Did you do that yet? So stay on top of those people to keep them moving forward. If they're doing what they're needing to be doing, the average processing time is 1 to 3 days. What slows it down, guys, is just people not answering the phone, or we need a certain document they're not turning in. Those things are what slows the process down. Anytime we talk funding, we always get the same questions. Number one question I'm going to get is, can I do this myself? Can I get my own funding? And guys, yes, there it is. You absolutely can get your own funding, but, and that's a big but, Michael, clearly, but that's okay because I like big butts. There are a few things that you're going to need to consider first, right? And this next slide is not to scare anybody. It's not to, try to throw you off. These are the things that you truly need to consider before applying for funding. How much funding do you want? And I'm on a little bit different size screen here, so some of these are squished. My apologies. I built this on a larger screen and I moved to a smaller one. Before you start, have you considered how much funding do you want, how much funding do you need, and how much funding do you qualify for? Those are all three going to be different numbers. We tend to think, how much funding do you want? And the number there is, we had somebody turn in $1 billion the other day. How much funding do you want? And he said $1 billion. And I was like, well, you know what? Shoot for the moon. That's what I say. How much you need is a little bit of a different number than what people might think, because they think I need 20 grand. And we're going to talk about how much you actually need in just a little bit. How much do you qualify for? That's going to be based upon all the things you're about to see in this slide. Where do you get your report, and what type of report do you need? Guys, you have tons of different types of reports out there. You've got RMCR reports, you've got standard lender reports, you're going to have what's called a consumer disclosure overview report. Different sites online give you different types of quote unquote reports. It's important to get a report that gives you all of the data that you're going to need in order to properly apply for funding. Here's a hint, it's not Credit Karma. What score model should I look at? We talk about this in my class a lot, of all these different scores, all these different score models, and we think that somehow or another credit scores get you approved for loans, and I'm here to tell you they do not. Credit scores do not get you approved. Credit scores get you declined, because I know lots of lenders that have a minimum credit score that says if you don't have at least this credit score, you're declined. But I cannot name a single lender that says if you have a certain score, you're approved. All that means is now we're going to take a better look at you. What type of funding do I need? This is going to come down to, what am I trying to do with it? Am I trying to buy properties? Am I trying to buy education? Am I trying to start business? Am I trying to pay people? Do I need cash access? What do I need with that money comes down into the type of funding that you need to be looking at. Once you figure out what type of funding you need, which lenders offer that type. There are some lenders that are going to offer check lines of credit versus other lenders are going to offer credit card lines of credit. Some lenders are going to offer direct deposit personal loans. Some lenders aren't. It's just, once you figure out what type you need, okay, who offers that? Then which credit bureau do they use? And I use this one a lot. I talk about suits, right? Like you imagine you've got 3 suits, like a suit and tie. And one of those suits is old and kind of worn out, and you've just had it a long time. You've got another suit, your second suit. It's not really that old, but you've worn it a couple of times. You really need to get it to a cleaner's and get it pressed. And then you've got this third suit that's brand new. It just came from the tailor. You look amazing in this third suit, right? If you have some big fancy meeting coming up, which suit are you going to wear? You're going to wear the nicest suit, right? You're going to wear the one that makes you look the best. Guys, we've seen people's reports be 100, 150, 200 points different between their highest scores and their lowest scores. The reason, and even though it's not the scores that get you approved, the reason is that the score of each particular bureau is only factored using the information that's on that bureau. So since it's only using the information that's on that bureau, certain items may not be reporting on all 3 of your credit bureaus. If, let's say, as an example, you have a collection or something like that that's only on 1 or 2 bureaus. Well, what that does is that leaves the ability with that third bureau, let's say possibly it's not reporting on TransUnion. That leaves the ability with that third bureau with TransUnion to seek out lenders that we know are going to check your TransUnion profile. What that's going to allow us to do is allow us to put you in your best suit. It lets you put your best foot forward so that they see the best possible version of you that they can. Will it create a hard inquiry? When will that inquiry post? How many inquiries do I have? How many inquiries does that lender allow? And which report shows how many inquiries? I hope that with these 5 questions, you guys will understand that inquiries are extremely important in the funding process. And when you start adding up those inquiries, guys, even though you might hear me in my class say that inquiries aren't super important to your score, they are super important to the funding process and to your likelihood of approval. The more inquiries you have, the less likely you are to get approved, even if you have very, very high scores. The reason is, especially recent inquiries, is imagine that there's a row of banks, right? 10 banks all on the same street. And I go to the first bank and I say, hey, I'd like a $10,000 loan. And they go, great, sure, no problem. I go to the second bank and I go, I'd like a $10,000 loan. They go, great, sure, no problem. I go to the third bank. I'd like a $10,000 loan. Great, sure, no problem. Fourth bank, fifth bank, and I keep going. if every bank knows that I'm applying at another bank, eventually they're going to look at it and go, well, wait a minute. You've been applying at banks all day. And I'll go, oh, yeah, it doesn't matter, though. I didn't get those loans. The thing that people miss is it doesn't matter whether you were approved or declined. And here's why. And if you were approved at all those other banks, then the fourth, fifth, or sixth bank, they're looking at that and going, okay, well, I don't know how much you were approved for. I don't know how your utilization ratios are going to change. I don't know how your debt to income ratio is going to change. I don't know how your credit types is going to change. I don't know what your credit profile actually is right now because I don't know what happened on all those inquiries. And since I don't know, that means risk. So if you were approved, you're riskier. The other side of that unfortunate coin, though, is if you were declined, you're still riskier because the bank's looking at it going, well, I would have approved this loan, but I'm curious, why didn't this other bank? So even though it doesn't say necessarily on your credit whether you were approved or declined, when they see inquiries, it doesn't matter whether you were approved or declined. It still creates risk for that lender because it creates unknown factors. What types of credit do I have and how does that affect your approvals? Guys, just having certain types of credit on your profile can cause you to be either approved or declined with other lenders. They may have factors that they say, hey, look, you've got too many consumer finance accounts, right? A lot of lenders don't like to see a lot of things like errands and Rent-A-Center, accounts like that. They don't like to see those. Some lenders don't like to see a lot of secured cards, right? They don't like to see secured credit. They want to see unsecured credit. Some lenders, a lot of your like peer finance sites don't like to see other sites like them on your credit profile, or at least not many. So the different types of credit you have, if you have a lot of open revolving credit, it's going to be tough to get new open revolving credit. But the metaphorical rock to that hard place is that if you have no open revolving credit, it can often be hard to get new open revolving credit. So you have to focus on different types of loans or lines in that process in order to get the right ones. What are my utilization ratios? Guys, I'm going to ask, and I want you to really be honest with yourself, really be truthful with yourself. Do you truly know how to fully figure your utilization ratios on your credit report? And if you do you know exactly what those utilization ratios are right now? And I'm going to tell you, me, Eric, as a credit instructor, I don't know my utilization ratios right now. The reason I don't know my utilization ratios right now is my cards get used and paid off and used and paid off. You know, I use my credit cards a lot because I like points, but at the same time, I like to keep my balances low. So I have a person that pays them off every week actually, but I don't know 100% what my utilization ratios are. But let me assure you, if I was to be applying for something, if I was going to be buying something, I assure you that I would know what my utilization ratios are because they're a major factor in my credit profile. So I'd figure out what my utilization ratios are. What is my debt to income ratio? I want you to answer this question to yourself. Truly, commit to an answer. Does your debt to income ratio affect your credit scores a little bit or a lot? And I hope you actually thought about that. I really hope you answered it because the answer is debt to income ratio does not affect your credit report or your credit score at all. None. Zero amount. Debt to income ratio does not factor into your credit report or credit score at all. What it does factor into is your likelihood of approval. So a person could have extremely great credit report, really, really high credit scores, but their debt to income ratio could be a mess, and that could cause you to be declined as well. So there's far more to it than just what's my score. Finally, how do you access the money? Guys, this is one of the biggest things that I've seen along the way of people that kind of take it on their own is they'll access their funds improperly, and they'll go from maybe an account being 0% to moving over to that account being 29% or 24%, just because they access the money improperly. And then finally, have you considered the number one reason for instant decline of applications is improperly completing the application? When you apply for something, especially online, that application is issued what's called an application score. if your application score isn't high enough, they don't even move to the part of checking your credit because they have information right in front of them that they know they're not going to work with you. So why would they be worried about spending money to check your credit if they already know that they're not going to work with you because the application score wasn't high enough? And one of the best ways to get a low application score is improperly completing the application, putting the wrong information in fields, not leaving, leaving fields blank. Here's a hint to you, a little funding tidbit. There's no such thing as a not required field. Every field's required. Keep that in your head. Every field is required. If you have an answer for that field, put it in there. I don't care that it doesn't have a little asterisk beside it that says it's required. The more information that you put in, think about if you were lending your money, would you rather have more information about the person or less information about the person? You'd rather have more info. So there's no such thing as a not required field. So all of those things kind of lead us to change these questions sometimes from can I to should I, right? Should I do this myself? And then I know that we've had some issues in the past with IMAs, and it really comes down to should I be doing this for other students? And I'll tell you that, guys, we've had people threaten criminal charges. That's not a scare tactic. That's a fact. We've had people issue compliance complaints to corporate because they followed the advice of their 5-star or their 1-star or just their enroller. You know, somebody starts 2 weeks later, they bring a guy, and then that person's now trying to give the other person advice. And, you know, we just don't know the answers to these things to be able to do it. Second to that, in order to do these things, there's agreements that must be in place. You have to have signatures in place. You have to have powers of attorneys in place. You're legally required to have 2 years of record keeping. There's a lot of information that the law requires if you are doing something like this for someone else. Something that's come up quite a bit in compliance talks recently at corporate. And another question we get a lot is how much to get? How much should I be getting? Because most people think, well, you know, I need 20K. But it's not just about 20K. So yes, education, to be able to use the cash discount, is 20K. Otherwise, we know that number's going to $24,997. But utilizing the cash discount drops it to 20K. But people go, I need $20,000, Eric. And I go, well, you know, don't forget, we do charge funding fees. And they'll say, oh, that's right. Okay, so 20. And I say, yes. And they go, awesome, I need 22. And I'll say, you know, hey, you might want to leave yourself some room for payments. You know, it's a process you can use in the very, very short term. The accounts can even cover themselves to get you started. And they go, oh, man, that's a great idea. Give me 24. But the thing that I need you to remember is also don't manage your credit profile. So when somebody says, how much should you get? The answer is as much as you can feasibly get and use wisely. And here's why. In the South, we have a phrase. It goes like this: get while the getting's good. And getting while the getting's good means that you can, oh, okay, I'm sorry, Michael. I appreciate that. So getting while the getting is good means that there we go. I went ahead and muted everybody. We had quite a bit of feedback, so I appreciate Michael on that. Thank you for letting me know that I could do that. So get while the getting's good means that if it's the right time, do it. So what happens is, imagine somebody has the type of profile where they can get 100 grand. And then they come in and they say, Eric, I just want to get my education. I just want to get started right now. I just want 20. And I'll say, hey, you have the type of profile where you could get 100, I think, and they go, no. I don't even want to hear it. Give me 20. Well, we can't force anybody to take additional money. So we say, okay, we're here for you. And we get 20. Then you start taking your classes and you come in and people are like, man, I've learned such amazing things inside of my education. I'm ready to get going. Let me get that other 80 that you were talking about. Well, guys, that other 80 is no longer available. And it's not because I'm a jerk and say no. You are now in a completely different financial situation than you were even 2 weeks ago when we were doing your funding process, even a month ago, even a few days ago. You're in a completely different process. because now your utilization ratios, you got access to that money and then used it. So now your utilization ratios are significantly different. Your debt to income ratio is different. Your age of file is different. Your time since most recent account is different. Your number of inquiries is different. Your types of credit is different. All of those things are different. It's a completely different situation. So you very well and probably won't be able to get 20 and then come back and get 80. And I put it in a really simple scenario sometimes. Imagine that I asked Michael and I said, hey, Michael, let me borrow $100. He'd be like, sure, here you go, $100. I think I'm probably good for it, Michael.
Absolutely.
Right. So if Michael said he'd loan me $100, now watch this, Michael, let's role play this a little bit. Hey, Michael, can I borrow $20? Michael I lost him there. Would you let me borrow, you said you would have let me borrow 100. So surely you would let me borrow 20. And I'll say, hey, Michael, can I borrow $20? And he says, sure. And then a few days later, I come back and I go, hey, Michael, can I borrow $30? And he's like, I mean, I guess so, but okay. So now I'm up to 50. And I come back a little while later and I go, hey, Michael, can I borrow $50? And he's like, no way. I loaned you 20. I loaned you 30. Now you're wanting 50? When if I would have just asked him for 100 in the first place, sorry about that, guys. Registering for an assessment is a super simple process done at getfundedonline.com. It is not an application for credit or funding. It's simply allowing us to go over your profile to see what options are available. It's offered free by Credit Nerds. There is a $1 fee to access a 7-day trial of a credit monitoring account. The credit monitoring account that we use is called checkmy3scores.com. We use it specifically for a couple of reasons. Number one, we know it has all the data we need. And number two, we try to keep that consistent so we can use as few sources as possible so that our algorithm allows us to compare apples to apples. So the data that we're comparing from person to person matches because we got it from the same source. We will not allow free services like Credit Karma, Quizzle, Credit Sesame, those. We don't allow them because they don't provide all the information that we actually need. Credit Nerds does not own those sites, and we do not charge you a fee for the monitoring sites. That's the monitoring site, okay? The $1 isn't paid to us for your trial. So that's your registering for an assessment. Next is the funding process calls. There's 2 calls. And guys, I need you guys, if you are on these calls or if you're sending someone to these calls, make sure that you ask them to listen in these calls. One issue that we've had recently, very unfortunately, is the IMA thought that the process went one way, and they told the client that. And we went through, we did the welcome call, we did the planning call. At the end of all that process, the client was upset, and they said, well, that's not what my IMA said. And I'm like, yeah, but that's what we said. He said, yeah, but my IMA said, my enroller said. And I'm like, guys, I can't. Guys, I don't know why I keep getting kicked out here, unfortunately. But we're going to go over all of those disclosures and things like that along the way. The application phase, at this point, we're going to be working directly on your behalf with lenders, some by phone, some online. But it's important to understand that at that time, after that funding planning call where we say we are moving forward with the application phase, you can't pick and choose lines, right? You just can't, because when a line is issued, it's issued. That's over. It's done. So, just make sure that you can't do that. And lastly, accessing the money. We'll be glad to go over a process with you of how to access the funds in the cheapest possible way to keep your fees and costs down. Accessing the money improperly can cause you significant amounts of interest and fees. Wanted to throw a little slide in here to meet my team. There's Stephanie. That's Karen. Bottom left is Randy, and bottom right is Patty. These guys help our process move along very smoothly. I don't know if you've ever communicated with Karen, but she's really, really great. My wife, Stephanie, has been by my side for 17 years now. All right. We do have some available types of funding. Give me 1 second here, guys. I'm so sorry. Went ahead and muted that back out again. Apparently when I get kicked out, it takes the mute away there. So some available funding types are unsecured lines, personal loans, and business loans and lines. So we do all of those things. Personal loans, structured payment based on credit profile with some financials, tend to carry lower interest rates but could be amortized. So we're going to make sure that you're aware of the difference and how that can affect you. These are traditional banks, credit unions, peer-to-peer lending, secured options, and short-term loans. Unsecured lines, guys, these are the holy grail of funding. If you've gone through your velocity banking class, you're very, very aware of how that would work. Based on credit profile and financials, majority will come as credit cards, but could come as check lines and or overdraft accounts. It's just a different way to access a line of credit, guys. So a lot of times somebody will say, I want a credit line. And we'll say, okay. And then they'll say, well, wait a minute, that's a credit card. I want a credit line. No, guys, a credit card is a credit line. A check line is a credit line, and an overdraft account is a credit line. And in fact, if you get a credit card, it says, congratulations, your new credit line is, so it is a credit line. It's just how you access it. You can kind of think about it like a credit line as the house, and just the different ways to access it is just the front door, the back door, or maybe a window if you locked yourself out. Lower monthly payments overall, fast approvals, use them over and over, no documentation. Most come with 0% for 12 to 18 months, but just because you have a profile that says you can't get 0% doesn't mean we're not still willing to work with you and to find you other things. Business loans and lines, there are lines and loans for existing businesses that do have no personal credit check. Yes, you heard me say that, but business financials will be required. Things like bank statements, 1099s, they're going to ask for proof of your business financials. They can be funded in as little as 24 to 48 hours. Some very creative options, and most are not personally guaranteed. There are also business loans and lines for startup businesses. These are going to be based on the owner's credit. There's going to be no current entity needed, funding in 10 to 14 days, and these are non-reporting blocks, which means they're non-reporting business lines of credit. They will only report to your profile if they become negative. And the reason that that's so powerful is all of that talk we were talking about where, hey, if you get this and you get this, it's going to change your utilization ratios and change your debt to income ratio. Guys, these lines don't report, and they won't report unless they become negative. So that means it's not going to affect your personal utilization ratios. It's not going to affect your personal debt to income ratios. It's not going to affect your personal age of file, all of those things. Highly recommend starting there. We do charge funding fees upon approval. And again, it's only upon approval, which means we only charge success. There are other programs out there that charge a significant fee up front and then also points on the back. I've seen a program out of Florida that was trying to get in front of the room down there. They were wanting to charge $2,000 up front and 15 points on the back. Ours is 9.99% of funding amount received. Once that money is available to you, we have a 48-hour window. If in that 48 hours you pay your invoice, we discount that invoice down by 10%. So it's actually like 8.99%. And we do that so that we don't have to spend a lot of our time and effort going after money. It's just, hey, you've already got access to the money. And if you'll do it within 48 hours, we discount it 10%. The other thing that people are seeing with our fees that's starting to get heard now is on lines or on loans that require you to do extra work. So if there's significant other steps that you have to take, we discount those quite a bit as well. So if there's a loan that comes with a interest rate, those go down to 4.99%. We don't charge 10% on those because you had to do a chunk of it, right? You're going to need to turn in some stuff. You're going to need to do most of the verification calls. Even though you will be prepped on what to say, it's still a lot of steps that you have to take. A couple of common myth conceptions here is that you can pick and choose your lines. Guys, it's a really big one that we're hearing. And we have heard it, and this is not to poke, but we have heard it from you guys' team. Once they move through that funding planning call, we're going to say, okay, we're moving forward with the applications. Are you aware that that's happening? And the person will say yes. And again, it's a recorded line. At that point, we go to get the lines and they're issued. So it's not picking and choosing, right? Before that, we can talk about plans and all of those things. But after that funding planning call, we say, you understand that we're moving forward with the funding process. There will be hard inquiries on your file. And at this point, we're making applications for lines. And the person says, yes, I am. So you can't pick and choose after that point. The only thing that you can pick and choose is anything that's considered a personal loan. So you may get offers for personal loans that will come with an interest rate and they'll come with a term that you can decline. But you can't decline anything that doesn't come with a term. So if it's just a credit line especially at 0%, guys, you can't decline that because we told you we were going to move forward, and that's what our process does. The line has already been issued. Another misconception is that all lines are 0% and that we only do 0%. No, we do other things, but anything that comes with an interest rate, you will be discussed first. You'll say, hey, we think that you might be a fit here, but it comes with an interest rate. Are you okay with that? Also on the personal loans that come with an interest rate, we do have to make an application. The application happens. You're issued what your amount and your interest rate would be. Then we're going to discuss that with you and say, hey, this is what they've offered. They've offered you this amount at this rate. Would you like to have that? On those loans, you can choose, to decline. On the lines, we cannot. Another misconception is that we only do credit cards. Guys, that's not the case. The difference of the reason that maybe people think that we only do credit cards is that's the majority of where people fit. Something that happens that we've noticed is that the very high end, the top end of credit profiles that really can do all of the direct signature lines and loans and check lines and things like that, they're not being sent because people think, well, this person's got good credit. I don't need to send them. Guys, the people that have the best credit profiles are the people that would benefit the most from this service because it's going to allow them to maximize those funding amounts and minimize the credit damage that they're going to face. And then the last thing is that we don't do business lines, and that's just not the case. We absolutely do business loans and lines. And just to bring it all together, use of funds, we really want these to be used for education and real estate. In fact, some of the lenders have required that they're used for those purposes. Be nice. Normally, this is Nancy telling you to be nice to my team, but guys, we're here to help you. We've had some people that get angry because we provide them with bad information of, hey, your credit profile is not as good as you think. And they'll go, no, I'm a good person. Or they'll say, no, that's only on there because, and then they get mad at the messenger. Guys, we want your credit profile to be as good as possible too. Think about it. The better your credit profile is, the more funding we would be able to get you. So just remember that we're here and that we've got your back. Use the system. So check the notes, then chat, then call. There's notes inside the funds program that allows you to follow along with anybody that you send over, allows you to follow their process. There's also a chat system inside. Then if you have questions, then call the office. But we try to limit the phone calls because our phone rings about 800 or 900 times a day, and that's not an exaggeration. And then privacy matters. Please no blind three-way calls. We've had people that have called in, asked a bunch of questions, and then at the end of the call, they said, hey, Joe, did you get all of that? Did you hear what he said there? Guys, we have privacy laws and rules. I need everybody that's on the phone disclosed if there's somebody else on the phone. I love a three-way call. If you want to call in and have a three-way call with myself or with my team and with you and your prospect because you got some questions, no problem at all. No problem. But everybody needs to be disclosed. And guys, that is the funding process. I hope it cleared up any questions for you. I hope it cleared up some confusion. Nancy and I do a webinar every Tuesday night at 8:00 Central. It is, welcome and open to anybody from any team. And but it fully explains this process in a little bit more detail than I was able to go into on this call because I wanted to keep the time down and nice and short for you. So, Michael, I appreciate the opportunity to come out and share some of how our program works and some of the specifics of what we do.
Yeah, man, I appreciate you taking time and making it clear and easy for us to understand. And a couple of those myths that you cleaned up, I gotta put my hand in the air and say I was guilty of that. I told some people that they were going to be able to pick and choose, and that was my misunderstanding. So thank you for clearing that up.
Yep. If you think about it, you guys have applied. You've applied for a credit card or a line of credit before, and when the application happens, it's either approved or declined. That's it. If it's approved, it's just on its way. So that's the problem with the picking and choosing.
Right. We should just take it all. And then as far as people who are getting loans, help me put a positive light on when we're talking about getting loans. After someone's seen our Velocity Banking workshop, then we say, all right, yeah, go get your funding. And then they're offered a loan at a higher interest rate than they were expecting. To me, it's like, well, hey, you got the money that you didn't have. Now let's move forward. But how else can we shine a positive light on that? If they were wanting 0% lines and then we give them a 15% loan, what are some things that the IMAs can say to help them look at that in a positive way?
So I'll tell you the answer to that one's really simple. If somebody gets a significant large amount just in lines, that's great. Don't take the loans, right? Nobody, and we're never gonna. We don't force anybody. We don't even really strongly recommend for a lot of people. However, we take clients that other funding companies won't, right? We work with people. I don't care if our goal is to find this guy $2,000. A lot of companies, if you can't get at least 30 grand, they won't even work with you. So we've had people come through that, what if they can only get $12,000 to $15,000 in lines because they just don't have the profile to support it, but they're able to get a $25,000 personal loan. That's going to allow them to actually get their education, to have some room for growth, and they can take both. So they can take the $12,000 to $15,000 in lines, take the $25,000 loan, use their loan to get their education, use the lines to Velocity Bank their loan. It's a great practice round of Velocity Banking for them to get. That's the first thing maybe they get rid of, was that loan. But when you're talking about, we had somebody come through recently, they were able to get $16,000 in lines and $30,000 in a loan offer. The person declined the loan offer and would only take the $16,000, but then also kind of said, well, you guys didn't get me enough to get my education. And I was like, well, wait a minute, we got you access to $46,000. You declined 30 of it. If that makes any sense. It's about goals. And our goal is to find a person as much money offer as possible so that they can utilize that. And then secondary to that is, $30,000 at, 8 or 9 or even 12 or 15% for that matter. What's hard money? I see a lot of, Nancy talks about her first deal was at 18%. The faster you can turn that money around, if you know what you're doing with money and you turn it around, guys, interest is just a cost of doing business at that point. It's not as detrimental and damaging as kind of everybody thinks. Velocity Banking is awesome. And when you look at it at a mortgage and you're talking about saving hundreds of thousands of dollars, that's way up there in importance. When you're talking about a 3-year, $30,000 loan, we're talking in the single digits of thousands of dollars in interest. So I just look at it a little different, I guess. I look at it as what's that money going to make me, not what is that money going to cost me.
Boom. Thinking like a business owner. What is that money going to make me? Not what is it going to cost me? I love it. Cool.
All right, buddy. So I'm open for any questions, or if it's time to get off here, I appreciate the time, but I'm whatever you need, man.
There's a few people who chatted in some questions. Maria says, you said we can apply with our businesses. Can we work with you to get funding under our businesses? I think
absolutely. Yeah. Absolutely. So when you get an assessment, you're going to get a call from my team, talk to them about business. We've got some people that, only want business. Some people that only want, personal, different things. Now, I will say the team is going to try to talk to you about what's best for you on how to get the most funding, if that makes any sense. And of course, the cool thing about our program is that our goals clearly align, because you want as much funding as possible, and I want to fund you as much as possible. Plain and simple, the more I fund you, the more money we make, right? Like, that's a good way to keep somebody's goals aligned with yours, is to just work based upon success. So if somebody says, hey, you're a better fit for X, Y, or Z, it's because our time and experience shows that we know that you're a better fit for X, Y, or Z. So when I say, a person only wants this or they'll only take that, we can't make you take anything. But guys, I assure you that follow the system, listen to my team, Karen and Stephanie. They've been doing this a long time, guys. And like I said, Karen's been with me for over 6 years now, and Stephanie's been by my side for 17. So they really know what they're doing.
Yeah, definitely. That's one thing that we are constantly telling people is the credit nerds are part of our Renatus family. So you must treat them with respect, the highest level of respect. Like if you're calling Bob Snyder, but you're talking to Karen or you're talking to someone else, same level of respect. It does not matter who you are, how long you've been in. It's maximum respect in this community and this culture. So make sure your guests know that. Make sure I've told people before, hey, if you're a jerk to my credit nerd people, I don't care if they get you the money. You're not going to join, because it's more important that we maintain a sense of culture and respect here. And, they straighten right up. They correct their attitude. You got to let them know. Basilio has one last question. He says, got a prospect, just got approved for different lines. The last note on his account was he will discuss with his affiliate to determine which ones to use. How to use them and find education. So who should advise him, and how should he go about that?
That's a great question. It's not the affiliate. So here you go, guys. Let's even take out the could, right? Let's even take out the could the affiliate be the best person to advise him? It still also comes down to the should. In order to do those types of things, there are legal requirements that you must have. Are you licensed, bonded, insured? Certain states require different disclosures. Do you have your record keeping in place? If you don't, then answering those questions is illegal for you. So one of the things that Nicole and I from corporate were talking about was that people taking on these roles, that it's not that you can't do it. It's that you don't have all of the paperwork in place. You don't have the requirements in place. You don't have the record keeping in place that legally you have to have. So just by saying, hey, you should apply here. You should use this credit card to get this. You should use this loan for that. You're falling into the realm of financial advice, and if you're not properly licensed, or if you don't have the right credit paperwork and record keeping in place, you're breaking the law. So when it says we'll discuss with affiliate which lines and stuff to use, guys, have them call the office, have them go over it with Karen. Karen would love to say, hey, we really recommend using this line, use this line to cover this, use this loan. She'd be glad to. Don't take that on yourself. You're taking on liability that you just don't need to take on.
Yeah, it's much easier. I've noticed when I'm just like, you know what? Why don't you leave it to the experts instead of trying to act like the expert? Just let the experts do it. Your business will grow. Your liability goes down. Their experience is enhanced. I mean, it's just let the experts do the experts. You don't go around practicing law if you're not a lawyer. You don't practice medicine if you're not a doctor. Same thing here. You got to just stay in your lane.
Yep,
We are marketers, and we market. That's what we do. Also, I found it super easy, guys, when I'm using the chat system. I go and check the notes. It saves me so many calls. I used to sit on hold for a while and then, realize I could have spent 30 seconds in the app and just looked at the notes. So use the notes. Look at what they're doing. They document everything. It keeps us informed, and that way you don't have to sit on hold forever.
The contact, just to let you guys know, getfundedonline.com, or the phone number is 877-614-6373. I will tell you the way to go: get a funding assessment. We don't force anybody to get funding. The funding assessment's free, and I'll even tell you this: abuse it, right? Go get an assessment, even if you're just curious. I don't mind that at all, because we love the chance to talk to people about things that we could do. Maybe there's something on the credit profile we could help with. Maybe they do want to, do funding. Always glad to help.
Perfect. All right. Well, thank you so much, guys. This recording will be up here in just a couple hours. Thanks, Ron, for hosting today. And for the rest of you guys, it's Wealth Wednesday, so stay focused. It's your time to grow, your time to shine. Thanks again, Eric. See you guys
Michael,
later.
do you mind, just as we close, do you mind if I give the address for our Tuesday webinar?
Oh, yeah. Go for it.
The Tuesday night webinar for funding is BDG, boy, dog, girl, bdg.adobeconnect.com/funds, FUNDS. And then somebody asked for the number again. It's 877-614-6373. So thank you, guys. I appreciate it.
Okay, perfect. Take care, guys.